Hey everyone, welcome back to Corporate Dakota, the place where we decode the often confusing world of corporate filings. Today we're diving into a proxy statement from Harrow Inc., a company that focuses on eye-related pharmaceutical products. And let me tell you, this document is more than just ink on paper. It's a glimpse into where the company is headed and how they plan to get there. Prepare for some interesting details on executive pay and a chance to vote on it. This proxy statement is essentially a notice for Harrow's annual meeting of stockholders, which is like a town hall for company owners to vote on important things. We're talking about electing directors, approving a new incentive plan for employees, and even weighing in on how much the top executives get paid. It is dated in April of 2025, so this is a look into the future. In a manner of speaking, the main event, the 2025 annual meeting, will happen in June in Nashville. Stockholders get to vote on key issues, and this proxy statement is their guide to making informed decisions. It is important that you send in your vote, even if you cannot attend. First up is electing the board of directors. The board is responsible for overseeing the company's management. There are 4 nominees here, each with their own background and expertise. Mark Baum, the current CEO and chairman of the board, has a long history with the company. Adrian Graves brings a wealth of experience in the pharmaceutical industry, specifically in eye care. Lauren Silvernail offers financial and business development acumen, and Perry Sternberg, the lead independent director, has extensive experience in biotechnology and pharmaceuticals. It is important to have an independent director to make sure the company is not being reckless. The board recommends voting for all 4 nominees, believing they're the right people to guide the company forward. Next up is the approval of the Harrow Inc. 2025 Incentive Stock and Awards Plan. This plan is basically a way for the company to give stock options and other awards to its employees, executives, and directors. It's designed to motivate them and align their interests with the success of the company, which of course benefits the stockholders. The company wants to make sure that its workers are happy, incentivized, and most importantly, working hard. It aims to retain the workers via the promise of equity. The big number here is 3,000. That's the number of shares the company wants to set aside for these awards. About 11% of the current shares outstanding. This means they will get diluted a little as more shares are issued. The next item is about the company's accounting firm. The audit committee has chosen Crowe LL to serve as the independent registered public accounting firm for the upcoming year. Think of them like financial referees, making sure the company's books are in order. For 2024, audit fees totaled over $804,000. Audit-related fees were roughly $53,000. Tax fees totaled about $164,000. Crowe is a big nationally known accounting firm, so they should be responsible. Now we arrive at the say on pay proposal, where stockholders get to give an advisory vote on the compensation of the company's top executives. This isn't binding, meaning the board doesn't have to listen, but it's a chance for stockholders to voice their opinion on whether they think the executives are being paid fairly. This is a big part of how involved Americans are in their companies. The board, of course, recommends voting for the executive compensation as it is currently structured. This is the same as every year. We've got to vote on how often the company should hold this say on pay vote. The choices are every 1, 2, or 3 years. The board recommends holding it every year so stockholders have a regular opportunity to weigh in on executive compensation. They do this to signal they care what the voters, the shareholders, say. This section outlines the company's corporate governance practices, which are the rules and procedures that guide how the company is run. It covers things like director independence, how directors are nominated, and how stockholders can communicate with the board. Harrow maintains an insider trading policy that governs transactions in our securities by directors, officers, and other employees. And it is our policy to comply with all applicable securities laws when transacting in our securities by directors, officers, and other employees, and it is our policy to comply with all applicable securities laws. When transacting in our securities, they have a code of business conduct and ethics, which you can find on their website. Here we get a peek at how the directors are compensated for their service. They receive an annual retainer fee plus additional fees for serving on committees and equity compensation in the form of restricted stock units or RSUs. Adrian Graves made $80,000 in cash, Perry Sternberg made $102,500, and Lauren Silvernail made $77,500. They also get money in stock, every $50,000. These RSUs vest or become fully owned over $50,000. These RSUs vest or become fully owned over $50,000. These RSUs vest or become fully owned over $50,000. These RSUs vest or become fully owned over a year. Here we learn how much the top executives are making. The company's philosophy is to attract, motivate, and retain talented executives while aligning their interests with stockholders. They want the stock to go up, so they're incentivized to do a good job. The following table sets forth total compensation paid to our named executive officers. Let's break down the numbers. Mark Baum, as CEO, had a salary of $731, $121, and a non-equity incentive plan compensation of $61.61 had a salary of approximately $463,000, a non-equity incentive of $3,000 and non-equity incentive of $3,434,000. The higher their incentive, the better they work is the theory. There is also over $25 million of unvested shares from Mark Baum, over $11 million for Andrew Boll, and over $9 million for John Saharit. Equity is the main form of payment at a company like this. This is important. The company has a business relationship with other entities that key members also are involved with. Harrow owns about 20% of Surface, and Mark Baum and Perry Sternberg are directors, same with Mel Pharmaceuticals. There is a very strict and well-defined policy on directors and officers doing anything unsavory with their stock. Shorting, pledging, and any other similar activities are strictly discouraged, so we do not expect anyone to tank the stock for their benefit. Finally, a word from the audit committee vouching for the integrity of the financial statements. It is always good to see. The audit committee recommended to the board of directors that the company's audited financial statements for the fiscal year ended December 31, 2024 should be included in the annual report. Now, looking at Harrow Inc. more broadly, it is trying to shake up a fairly stable market by being creative. They are growing their top-line revenues and seem to be incentivizing the correct key members to do their job. One thing to note is the conflicts of interest from key members being on different companies at the same time, but this is disclosed in a clear manner. However, there are certain things that shareholders should take a deeper look into, such as future long-term growth. Is the current amount of shares outstanding sustainable, and are they spending in the correct places? For those reasons, and for the numbers we have examined today, Harrow is a company that should be watched more deeply. Thanks for watching. If you enjoyed, please subscribe, like, and comment. Let me know what other companies or filings you'd like me to decode in the comments.